dough that you slide food under the drawer to because he says he's so busy he can't see straight, right? The accountant, the nerd, the bean counter that you've had working for you for 40 years with soup stains all over his shirt. I want to see your journal entries, and I want to see them now, and I want to understand what you're doing to my company. Are you doing book depreciation on the slowest method so we get the highest level of bonding and profitability? And are you doing tax depreciation on the most aggressive method, as Dave said earlier? I want to know this. Software, get good stuff, hire good people. Technology is the key.
Well, there's a lot of good software out there. You guys need to understand all the software. I mean, there's a lot of good construction software out there. So that's one thing you guys really need to take a good hard look at, have people explain it to you.
Great stuff on project management, bidding, estimating, inventory controls. So you guys accumulate this inventory and you have no idea what's out there. You have no idea that's sitting out there. Review the bank statements, credit statements, and credit card statements before giving them to controller. Review internal control systems with your CPA. Talk to your CPA. How many of you have talked to your CPA in the last 30 days? That's great. You've got it, what is this, September, right? You've got taxes coming due. Some of you have got December 31s. You should be getting your year-end planning, tax planning done right now. You should be meeting with the CPAs. And if you don't meet with that CPA once a year, you're in big trouble, and so should they be. Again, segregate duties, open up bank statement, internal controls, examine the bank statements every month, payroll checks, signing checks, cancel supporting documents. Every document that you review, sign it, evidencing that you've paid it. Never sign a check that's not completely filled in. Do not pay from vendor statements. Pay from only vendor invoices. Verify the names of your vendors. We have people do vendor reports and they don't know the names of some of the vendors on the vendor reports. You know why? Because it's a fake vendor. It's a fake vendor. It's a fraudulent vendor. That's where the controller socks the money away. It's not a lot. It's only $1,000 a month. You don't see it. It's only $1,000 a month over a couple years. You don't see it. Protection of valuables, keep everything as much as you can locked up. Prepare and use budgets. Budgets are extremely important. When we opened this program today, we talked about do a budget. Check your budget. Have your controller say, what was the budget amount? What's the actual amount? Why do we have a variance? Why is this cost up? Why is our medical insurance up? Why is our electricity up? What are we doing? Okay, always verify employee references. Don't abuse your company. There's, you're the leader. Management, leadership. You're the leader. You are the leader. Get back to where you were when you began this whole thing. Lead this company. Get back in that office. Be the first one in. Be the last one out. Show your people what you do that made it this good. And if you're not there anymore, let it go. Find somebody that'll take you out. Project management, sales, administration. Do not hire less than appropriate people at jobs. If it's your family member and they're less than appropriate, listen to your outside advisors. If your outside advisors don't tell you that your kid doesn't know what they're doing, fire the advisor first, then fire the kid. Okay? Share your goals with your people. Tell your people where you're going. Tell your people where you want to go. Tell your people what you want to accomplish. And pay the people that get you there extra dough. Doesn't have to be a lot. Doesn't have to be a huge bonus. Doesn't have to be anything like that. It can be all sorts of things. We'll talk about those. Job descriptions. A lot of people don't have some job descriptions. Simple. What am I supposed to do? How do they know what they're supposed to do if they don't have a job description? Sit down. Tell them what they're supposed to do. Hire competent counsel. Hire an attorney that's not your golfing partner. Not your cousin. Hire a great attorney, not one that's ruthless and mean, but one that's smart and ruthless and mean. And one that knows the judge. That's the best kind of attorney. Review all bank documents. Dave talked about this. Read your bank documents this year. These banks are coming back and they're tricking all of us. They're putting things in there that you've never imagined, and they're going to make you accountable to those in the future. Keep all your matters of corporate governance. This is legal. Related party transactions. If you own a building, an outside entity, which I hope all of you do, make sure you have a lease. Make sure it's a triple net lease. Make sure that it's fair market value lease. Make sure if your notes from stockholders are prepared, that your key employees have non-compete, non-disclosure, non-solicitation. But everybody in the room says, oh no, we can't do a non-compete agreement because it's not, you can't hold up in the court. Well, but what about a non-compete agreement with liquidated damages? where you say, go ahead, compete. But if you take that hospital from our company, you're going to have to pay me that hospital's gross margin over 5 years. Okay? You can compete. You just got to pay me the profit that I allowed you to get. Liquidated damages. Key contracts, non-disclosure, liquidated damages, board minutes. Identify, recruit, and develop a second level of management. Who's following you? Or are you just going to get old and let everybody that's good at your firm leave and start a new company? That's how we seem to grow new companies, isn't it? Create business plans with key people. Reward key people. Share financial data with key people. Consider deferred compensation plan. We are entrepreneurs. Entrepreneur is a Latin word that means crazy, insane, fool. We do not give stock to our employees. We do not like to recognize them as employees. We like to pay them and make them go away. But they, who are good, want to be owners. What can we do? We can perhaps offer them a deferred compensation plan. Some of you have heard it. What is it? It looks like stock, smells like stock, walks like stock, but it's not stock. It's a deferred compensation. It says, I'll give you this percent of the company based on the profits of this company if you stay with me for 10 years. If you leave me and you go to a competitor, you lose it all. You lose it all. So it's got some teeth in it. It's got some real live teeth. And at the end of it, it can be converted into a stock option plan. We've got a copy of that at our office that we've drafted. We can provide you with an outline of that if you are interested. Key employees, life insurance, disability insurance, give them some benefits. Give yourself, hopefully, some benefits. Hopefully, everybody in this room's looked at all their benefits and said, do I really have everything that I need to have? Family, are they really the right choice? Or are they the only choice? Key employee, conduct annual retreats. Okay? Annual retreats are great. Where are we going? How are we going to get there? Taxes. We talked about a little bit about this, and the time's up. Section 179, $250,000 in 2009, going up to 500.
I think it's going to 500,000.
500,000. Section 199, it's a credit available to contractors. It's 9% of profits up to 50% of payroll. If your CPA didn't take that, fire them. They're stupid. They don't understand what contractors really are. Look at 179D. That's some energy saving things that you can get. You guys need to be aware of this for your customers. 179D. Make sure that you're aware of that. It's an energy opportunity for you up to $1.80, I believe, on a building. It's neat stuff. You can get it for lighting.
Yeah, we have a memo on that. We'll send it to all you guys.
We can send it to all of you as well. Net operating loss carried back. The rules got changed. You can go back 5.
And I think they extended them for this year again.
Basis. Look at it. Cost segregation for your real estate. Think about it. We save people lots of money in this. Capitalization policy. Look at it. S corporations. If you're having an S corporation, you're having a bad year this year, you can reduce your compensation and take out distributions.
Right.
Remember, it's got to be ratable between stockholders, but it's a planning idea. Your net profit improves, cash flow, you don't pay payroll taxes. It's a neat way to plan and make your income come out where you want. C Corps, some guy saw me in a hotel last night. I said, hi. He said hi to me, and I said, I'm sorry, I forgot your name. And he said, C Corp. And I knew then that he's one of the guys that I used to tell, stop being a C Corp. S Corps, LLC is the way to go.
How many people here are C Corps? What you might want to do this year, you shouldn't be a C Corp, but take a look at getting some of the excess retained earnings out of there. Take it as a dividend because it's the best way you can do it right now to get some of those C Corp retained earnings out of there. Talk to your CPA, say, rather than me taking salary or bonus, why don't I take a dividend? I'm going to pay the lowest tax rate this year, and probably tax rates are going to go up next year, so that's a really good planning tool.
Okay.
So ask that question.
Thank you for being here. Anybody that needs wants to be on our newsletter, drop your card off. Anybody has any questions, come up and see us. Thank you for being here. We're Jim Weber, Dave O'Brien, Weber O'Brien. Thank you for having us.
Yes. Yes.